we are going to discuss about already two session we can discuss about what is a merger and is accusation. Under this merger and accusation, we are going to discuss about SEBI guidelines of merger and accusation. What are the guidelines made by the SEBI? So what is the meaning of SEBI? This is Security and Exchange Board of India, Capital Market Regulatory. So SEBI, it is a main thing under, you have to follow the guidelines of rules and regulations issued by the protect investors, ensure trade, fair trading, and regulate stock exchange, brokers, mutual funds, and listed companies and other market expansion or participations. And the main objectives of SEBI guidelines: protect investors. First, you have to protect the investors from fraud and unfair practice. Second, ensure transparency. It is a security market. Prevent insider trade and market manipulation. Promote fair and efficient market. Regulate intermediaries like brokers, mutual funds, and investment advisors. Under this key SEBI regulations, it was started in the year of 2011 and the obligation disclosure regulations is 2015. Then we can see the importance of SEBI guidelines. First, insider trading regulations. What are the insiders made the regulations under the trading? Second, disclosure and listed requirements. Listed companies must be regulatory listed in the organization, the financials through the financial statement, shareholding patterns, corporate governance report, material events affecting investors. The mutual funds under this fund launches, expense ratio, portfolio disclosures, investor grievance, trust and AMC responsibility. KYC that comes under the PAN card, Aadhaar, or the driving license or address proofs. This all comes under the KYC norms. Then prohibition of fraudulent unfair trade practices under the SEBI, price ringing, circular trading, fake market rumors, manipulation trading practices. IPO that comes under the guidelines, public guidelines. Provide your prospectus with complete disclosures. First one, meet eligibility norms, disclose risk clearly, follow pricing and allotment rules. Next, investment advisor. Under this investment comes under the register with the SEBI, disclose the interest, maintain transparency, follow ethical standards. Next, we see approval process. Under the approvals, company must file draft schemes with stock exchanges and need approval from SEBI as well as the exchange before proceeding. Corporate governance, SEBI mandates independent directors and audit committees. Shareholders approval required to protect interest. Complaints framework, oversight from transaction announcements to complaints, strict penalties for non-compliance, fines, suspensions. Recent amendments taken by the year 2021 under the accusation. The main key functions of SEBI: first one, regulating the stock exchange, registering and monitoring intermediaries, conducting investigations, imposing penalties, educating investors, monitoring takeovers and accusation. Then official SEBI legal resources, it comes under the mutual funds, stockbrokers, listed companies, IP investing, investment advisors, and research analytics. Under this, we can know what is the SEBI, what are the rules you have to follow, how you are going to avoid the buying of shares in the organization. So main aims for this transparency. So there will be a transfer of buying and selling of goods in the market in the shareholders through the listed companies. Then stock holder protection. So we have to safeguard the investors and market fairness. Adhere a visual for legal and ethical sound deals. So the SEBI advises and analytics to register with the SEBI, disclose conflict of interest, maintain transparency, disclose risk clearly, follow pricing allotment rules, meet eligibility norms, provide a prospectus completely, circular trading, then trust and AMC responsibilities, expense ratio, investors grievance. This all should be known by the shareholders in the organization. Thank you.